This trade made me over $8,000, and these students took the same trade as me, following my mechanical three-step process that I'm about to teach you right now. Okay, so this trade was taken on the German DAX market, and I'm going to run through every time frame that I used to analyze the markets and how I actually got involved in the trade, including the execution. So we start off with the daily time frame, which is the overall macro sentiment for me in terms of structure. Where is the market likely heading in the long run? We zoom out on the daily, we can see it's printing higher highs and higher lows, exactly like the case studies in my previous video last week. If you haven't watched that, go watch that after this, because I go over around 6 different trades in this exact market. But this is a trade that I took literally last week, so this is very recent. And all we need to identify is the high highs and higher lows. So we have a structural high here which was broken soon after this low was taken as a liquidity sweep. So I'll circle this here. Nice run on liquidity, which then went on to break structural highs. Then we have another high broken here, which also similarly was after a run on daily sell-side liquidity, which continued to the upside. Now at this point we didn't have this daily candle print. When I go to the 4 hour, that will disappear. But we have a really bullish market at the moment, and this is going back quite some time. In fact, over an entire year the daily overall sentiment has been bullish, so it makes sense to continue buying. Now we had price come back to mitigate the high of the previous range. I would have liked to have seen price come down and take that wick and then come back inside, which is why I didn't take buys down in this discounted area. I was waiting for further liquidity on the daily that we just didn't get, and that's absolutely fine. We can get liquidity on a lower time frame, so the 4 hour, even just the 15-minute. Normally the 4 hour before pushing, I wouldn't skip straight from a daily time frame to a lower time frame such as the 15. Most of the time I actually spend on the 4 hour. But before price took this high, I was anticipating price would continue anyway. And by the way, I took the trade after the high was taken as a continuation with momentum. So let's jump down to the 4 hour time frame and analyze this. So this is a period of around 13th of December to around the 13th of January. So a good month, right? And this is over the Christmas and New Year holiday period where volatility is low. And actually for a 2-week period, the European indices market was actually closed completely, which was in, I'll show you this area. So quite choppy, low volatility, sideways consolidation. So that was an area that I wasn't looking to trade for that reason, as well as, like I say, I was expecting actually these lows to be liquidated first, like this, and then I would have been looking at buys in this region, but we didn't get that. And that's absolutely fine. The market isn't perfect, right? You'll hear me say that quite often. But what price did do, as you can see again, price came back to retest the high of the previous range. We are bullish, so buys will make more sense than sells. And if I zoom in, instead of external liquidity, which is something that I was waiting for, if I look at ranges, again, if you haven't seen my last 2 videos, I go on ranges and time frame alignment, momentum shifts and continuations a lot in that previous video. So straight after this one, which will give you an idea of how I trade, but the next one goes really in depth. So we have a bearish range here, which price takes at this point, and the point of failure is after this high, which was the initial sweep of the previous highs, is then breached. That shows break 1 and break 2 to the upside. So 2 higher highs after lower lows indicates for me, more often than not, a shift in momentum, a shift in trend on that time frame. And daily's already bullish. We weren't bearish at all on the daily. We're just waiting for the 4 hour to align with the daily and both be bullish. So we have that now, right? Now, what we did have inside of here, which I'll draw another range on, which again, this is the 4 hour time frame. We have a new high, a low, a high, and then a lower low. But look at the nature of price. It takes this range low, which is 4 hour sell side liquidity, just as it did on the daily time frame, remember, in these regions. So I'm going to circle this as a liquidity sweep. Now, of course, you don't know at the time if that's going to be a sweep. which is one of the reasons why I also didn't take the trade inside of this. I waited for commitment for price to show its hand and break the highs. But there was some opportunity to take buys at that point for those that were a little bit more risk adverse. And also, if we look at the previous range, we, instead of having external range liquidity, we have internal range liquidity. So internal of that range, we had 4-hour lows taken, which then drove price to the high, the external range high. And then, like I've already explained, this was the initial sweep. We see that reaction, that bearish candle, but it fails to push lower. Price then goes and takes that high. So this is the point of failure. Failure to push price lower, right? So we can expect higher prices from then. But you can wait for further confluences like I did. So price came back to take more 4-hour sell side liquidity. We see nature of price slowing down, how wicks form, and then price started to push off. We also had some news in here, some economics that I had to avoid. So what I'm looking for next is a clean impulsive break. Again, I referenced my last video, when price is very close to a high, both this high, internal, this high, external, even though we're bullish and this is a higher time frame draw on liquidity, I'm expecting price to take this high. I would not buy that close because we are risking being tagged in, tagged out, and then the trade going in your favor but without you. So again, it's a game of patience. Less is definitely more. And we can see now, not only has price broken above the highs, but at this point we have a 4-hour bullish and impulsive bullish candle, and it's closed, right? This is exactly what I was waiting for. I'll find a screenshot in Discord in real time and I'll put it on the screen around now, just to show that I was teaching my mentees exactly what I was waiting for before getting involved in the market. Now, we drop down to the 15-minute time frame, and this would be the following day. So I'm just going to play this forward because I don't trade the Asia session. That's when I sleep. And I will play till around 8 a.m. UK time because that's the earliest I will even open a chart. It's usually around even 8:30. So we have 8 a.m. at this point. You can see the London session denoted by this range box with this indicator. And we can start to break down price action here. So the first thing I noticed was we had this really early bullish drive even before London. It took sell side liquidity beneath Asia lows, but it pushed and it didn't leave any inducement behind. What I mean by that is, and I'll draw this on, if we get price do this, so that's Asia lows, and then just tanks to the upside, just in one move, there is no liquidity to fuel price higher, right? Not in terms of a quality setup. So the liquidity is resting at the highs and at the lows. So that's exactly what I was expecting here to the left. If I remove this, that liquidity would be resting below here. I'm certainly not going to be interested in just buying from here because that's not technically my entry model anyway. I want a 15-minute liquidity sweep at the very least. If I feel I'm not getting a 15-minute liquidity sweep and it's towards the end of either London or New York session, I will refine and drop down to a 5-minute or sometimes a 1-minute to look for additional liquidity sweeps that you can't see on the 15-minute. You will see them on the lower time frames, but 95% of my entries are still off the 15-minute. So playing this forwards, seeing this as an early inducement to induce buyers into the market, which is also adding buy side liquidity resting above here. So we've got, sorry, wrong draw tool. We have 15-minute liquidity resting above here, but we also have liquidity resting below here. Still inside London session. All I want is a run on liquidity inside this session ideally, and a retracement candle. So a bullish candle closure on the 15-minute is what I'm looking for. So we are very, very close. And then we can see exactly what I was waiting for. We get a nice wick of the lows and actually a really nicely sized candle as well. It's not too big. What I mean by too big, if we get a really large candle, then our risk to reward is much smaller, or price has to travel a lot further to get a decent risk to reward. And one thing to note is we are trading in all-time high territory. There is no targets to the left. There's no higher time frame structure like this one to target. So I am on the anticipation that I'll probably take a 3-to-1, 4-to-1, or trail my stop, right? And on this one, I closed manually for a 4-to-1 take profit because I was happy with that. Usually my profit targets are around 3-4-to-1. And usually I can get in and out of that before a 4-hour structural high or low if I'm trading internal higher time frame structure. So again, if I go back, I'm not going to zoom to a higher time frame because it will show this trade play out. If I'm trading inside of a range like this, we have higher time frame lows and higher time frame highs and even internal highs to target from a 4-hour perspective, right? So not that one. 4-hour internal, 4-hour externals. Normally I can get a 3-4-to-1 within that. If I'm trading external of that, then any more than a 4-to-1, I tend to see price turn around. And through experience, you don't want to be running 4% and then take a break even. So there's also that as well, right? So quite simply, market execution on this, had around a 60-point stop on this, just to give my trade breathing space, because what price could have easily done is, market execution could have come right down for more liquidity, resting below that candle, and then gone without me, right? It could have taken me out first, and that is quite common. That can happen. But price did run nicely. The reason we had this accumulation inside of here is because we had this quite large range produce, and when you get that impulsive nature, either early London or early New York, price action following that tends to be range bound. So I'm keeping my risk open and was not interested in taking risk off the table, hence moving my stop loss to break even until price gets to the actual highs like this. This is a point where I'm moving my stops now to break even. I have a 4-to-1. Actually, it was a 4.5 on this. And it was London the next day. This is an overnight hold. And I didn't take risk off the table until that next morning because we hadn't broken the structural high until actually 7:45 a.m. the next day, UK time. So pretty much less than an hour after I'd moved my stops to break even, I had manually exited the position. And you will see with the position that I'll share on the screen now, there was no take profit. I'm just waiting to see how far price pushes. And if it gets to around 4.5%, and I have a consistency rule on the account that I took, so I can't actually profit more than 4.5% in a single trading day anyway. So I manually exited at that position. Now, it wasn't just me that took this trade. I did explain to my mentees inside my Discord community the exact framework behind taking buys and what I was looking for that day, which was the 16th of January. And these students took the exact same trade that I did, which was not given that morning as a signal, but was actually put in as an outlook and explained on a live call the day prior. If this is something that you are interested in learning, then there will be a link in the description below on how to apply for my mentorship. And if you're here to watch the free content, again, I really appreciate any feedback that you give. Let me know your biggest take on this video. And if you haven't watched my video from last week, make sure you go and watch that upload because I actually covered 5 or 6 positions on the German DAX, similar to this, but more internal range structure on how to capitalize on higher time frame structural highs like these here. And come back to me in either this video or that and let me know in the comments that you've watched that, and I will catch you on the next one. Next week's upload is going to be something very special. It's something I've been working very, very hard on and I've been very patient for, and it's something that I'm really excited to share with you. Anyway, I'll catch you on the next one.